Hello and welcome back to Think and Link series. Today we are decoding a big move in India's bond market. State-run banks are gearing up for a wave of green bond issuances. It all started on March 4th when Bank of Baroda raised 10,000 crores through a 7-year green infrastructure bonds. The coupon 7.10%. And that is notable because 10-year government bond was trading at just 6.72%. Meaning Bank of Baroda raised funds at a spread of about 40 basis points. Normally, this spread is around 70 to 100 basis points. Now, the other public sectors are lining up. Union Bank of India is planning to raise 10,000 crores. State Bank of India around 7,500 crore. And more lenders like Punjab National Bank and Indian Bank are expected to follow. But here is the twist. Investors aren't exactly hungry for long-tenor bonds right now. With India nearing the end of its rate cut cycle and global volatility pushing yields higher, some issuers have even scrapped the planned sales. For example, Sidbi pulled back his 8,000 bond issue after bids came in too expensive. So 8,000 crores worth of bond issue was pulled back. So why did Bank of Baroda succeed? That's a very important question. Now, big institutional investors stepped in basically. Life Insurance Corporation, the Employees Provident Fund Organization, fully subscribed to the issue. And they are likely to support upcoming Union Bank and SBI bonds too. Still, analysts are raising eyebrows. LIC and EPFO usually chase strong returns for policyholders and contributors. Locking into 7.10% for 7 years when similar yields are available for 3-year bonds is pretty unusual. Some suggest government may be nudging these institutions to back PSU banks' green bonds. So, in short, state-run banks are pushing for green bonds. Now, the recent deals show the landscape. NABARD raised 5,055 crore at 7.10% for 3 years, while Canara Bank mobilized 5,000 crores at 7.24% for 10-year bond. But here is a kicker. India doesn't yet require institutions to invest in green bonds, and that is a very important cue that we must understand. So these moves probably are more about policy signals and market positioning than regulation. So investors are cautiously playing along. Government may be quietly steering the market. It is a fascinating mix of finance, policy, and sustainability. That's all for today's episode of Think and Link series. Stay tuned for more stories that make finance and market easy to understand.